Tesla just reported their latest quarterly figures, a miss across the board, one of the worst quarters that I've probably ever seen. And yet, the stock is up 4 to 5% at the time of making this video. Now, it has very little to do with the company's results and way more to do with the fact that, well, Trump said he's not planning on firing Fed Chair Jerome Powell. Talks with China will happen, tariffs will come down. So yeah, the market views this as quite positive. Pre-market right now, the S&P, the Nasdaq are up 1 to 2% at the time of making this video. So all of your portfolio is probably up at the moment. But let's really talk about this Tesla's quarter and the comments that were made during the earnings call. I just come off a 3.5-hour live stream with Amit. So if you did miss that, or if you just want a summary, well, here it is. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. We're going to cover quite a lot of companies in the next couple of weeks, so make sure you're subscribed to the channel and maybe you'll be the 90,000 subscribers. So hit that red button. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let's first start with the major overview here. So total automotive revenues are down 20% year over year to just under $14 billion. Energy generation and storage revenue, of course, no issues there. That's still up 67% year over year. Services and other revenue is up 15% year over year. If we go and look at total revenues, that's up 9% year over year. Total gross profit is down 15%. And total GAAP gross margin is down 104 basis points to 16.3%, which is basically flat quarter over quarter. Not bad. But what is bad is operating margin. We're now at 2.1%. That's down 343 basis points year over year, and that's down from 6.2% last quarter. Of course, if you look at income from operations, that's down over $1 billion, whereas operating expenses is up close to $200 million. Now, for automotive gross margin, we are, well, also down a little bit. Last year, we were at 18.5%. Right now, we're at 16.3%. If you look at regulatory credits, or automotive regulatory credits, that did decrease quarter over quarter, still up year over year. For a quarter, we're at $595 million. Last quarter, that was $692 million. If we look down here too, net income, that's at a non-surprising number for Tesla, $420 million, which of course is quite a big difference from the $2.14 billion that we had in Q4. Of course, Q4 usually a pretty strong quarter, and $1.4 billion same quarter last year. So by all accounts, this doesn't make sense, as Kronk said in Cusco. But yeah, by all accounts, this is definitely not a good quarter, far from it. Free cash flow, for example, only $664 million, still up 126% year over year, but down quite a lot quarter over quarter. Looking at outlook, so we were all looking for that one line right here for product outlook. So plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. Now, to be honest, based on the commentary that we've got in the earnings call, it does seem like these are going to be stripped down versions of Model 3 and Model Y, because they were quite reluctant to actually give us some valuable information. And they did focus more on driving costs down, especially monthly costs. So yeah, I think we're going to get just stripped down versions of Model Y and Model 3, which, I mean, is a shame. Maybe further down the line, we might really get a new model. But so far, my prediction is still going to be stripped down version of Model Y, Model 3. How much cheaper can they make it is a very, very good question. I have literally no clue. To be honest, I don't know. And it's probably not going to be super affordable still in Europe and probably in Asia as well. So yeah, that was a bit disappointing, but fine. They also talked a little bit about, well, their guidance. They basically said that they will revisit their 2025 guidance in their Q2 update. So probably they want to see what happens in the next couple of weeks and months to provide us with a more, well, informed decision in Q2. because, well, tariffs are going to impact Tesla. So they admitted that. Of course, it's not going to impact them as much as the competition, but it's still going to impact them. Oh, by the way, how did I forget that? Elon Musk said that a month from now, he's not going to step down from the Doge position. He's just going to spend way less time at Doge, 1 or 2 times per week, 1 or 2 days per week, and the rest will be, well, at Tesla. Now, if you've listened to my statement in the live stream, I'm not changing it one bit right now just because the stock is up. I still think that it doesn't change much. From the stock's perspective, maybe Wall Street likes it. But from a business perspective, I don't think Elon being 1 or 2 days at Doge and more days at Tesla is going to change, well, the fact that we are still going to get only stripped down versions of Model Ys and Model 3. I don't see how Elon being back at Tesla full time or 80 or 90% of the time is going to change that, right? So suddenly they're going to suddenly pop up a new model? I don't think so. Same with Robotaxi, FSD, same with Optimus. I don't think that changes much. Optics wise, yeah, okay, fine. But even when we talk about brand damage, the brand damage is not Doge. The brand damage is the Elon factor. People don't like Elon, okay? That is quite clear. So Elon stepping down from Doge is not removing any of the issues. Elon stepping down as CEO of Tesla, that might change something. Although people that hate Elon will not change their mind and suddenly buy a Tesla car. So yeah, I'd rather him just staying at Tesla for quite a long time, or as much as he thinks he's needed at the company. By the way, they also said that in Q1, they experienced record test drives. So I guess there's not that much brand damage overall. So that's great. Model Y, legacy Model Ys were also sold out during that refresh period. They did choose the Q1 quarter because that's usually a very, very weak quarter. So made sense for them. They did it in record time in, well, all of their locations. So congrats to that team. Now, they still did reiterate the following. The vehicles will utilize aspects of the next generation platform as well as aspects of our current platforms and will be produced on the same manufacturing lines as our current vehicle lineup, which probably means that, well, looks-wise, don't expect drastic changes. This approach will result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. This should help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 60% growth over 2025 production before investing in new manufacturing lines. If you didn't know, right now they are far from using, well, the full capacity of their production lines. Far from it. They ended by saying their purpose-built robotaxi product Cybercab will continue to pursue a revolutionary unbox manufacturing strategy and is scheduled for volume production starting 2026. If you want to look at the trend, well, since the March quarter of 2022, so 3 years ago, total automotive revenue is actually down 17% since then, but energy generation is up 343%, services and other is up 106%. So yeah, automotive revenue is coming down, so of course the other segments as a percent of overall revenue is, well, definitely, or not overall revenue, but as a percent of overall revenue is of course going to be bigger. And since we know that energy side of things, well, gross profit wise, margin wise, it's much better. Let's say that, well, the automotive side of things declining is hurting us less today because, well, the other sides of the business are now bigger than before, right? If you look at gross profit for energy generation, well, 3 years ago, gross profit was negative, was a loss here, and then was barely $100 million the quarter after that. We're now almost 8 times higher today. Looking at automotive sales growth specifically, well, the trend is pretty clear. We need to go back into growth mode, whether that's going to be through robotaxis or through more affordable models remains to be seen. Again, more affordable models to me means a vehicle that costs you less than $30,000, or in China and in Europe, it has to be much closer to $20,000 if you really want to make a dent in those lower tiered, well, segments. Remains to be seen what happens, but yeah, this trend here is very, very ugly. They did, of course, do the usual Tesla thing, which is not really answer the question that has been asked. For example, Pierre asked about, well, the fact that, well, people are still buying BMWs. Tesla doesn't really have that much market share as a whole in the whole car industry, the whole car world. There is a lot left on the table, and what is Tesla doing to maybe, well, grow that pie? We didn't really get an answer. We got more of a story about, well, the flip phone and the iPhone, etc., etc. So, okay, there is that. FSD pricing, we also didn't get an answer, clear-cut answer on that. We got the sentence that I don't think I've ever heard a real person say that, oh, they think they are not paying enough, or, I mean, it doesn't make any sense, right? Of course, if you use a service and you pay, let's say, $99 a month, who's going to say, oh, it is too cheap, please hike up the prices? I've never heard one person say that, to be honest. So there is that. Robotaxis, they did talk a little bit more about robotaxis and Optimus, so I guess that's good. I still want to see an Optimus event later this year, just for them to show off maybe the newer version of the Optimus. I think that could be great. They said the following, well, Elon said the following: he expects 1 million Optimus robots by 2030, maybe 2029. Okay, let's see if that really happens. The robotaxi service in Austin will start with 10 to 20 robotaxis in June, and then, of course, they'll make their way up. With regards to the energy side of things, they said that utilities are now understanding Tesla's energy value. They expect stationary storage to scale to terawatts per year. Of course, that will take time, even with Shanghai and the location in the United States. I believe right now combined, what is the output? 40 and 20 or something like that gigawatts. So yeah, there's still a long way to go. And so to conclude, a horrible quarter. The stock is very, very expensive. Yes, I've heard a couple of things that I like. I didn't hear a couple of things that I wanted to hear. No, I'm not going to buy more shares, because in this market right now, I do think that a lot of other companies in my portfolio are worth buying way more than Tesla right now. So yeah, it's great to see Tesla up, even though the majority of that move is based on macro stuff and not really on company specific stocks. But well, the overall portfolio will be up, your portfolio will be up as well. So we're all happy at the moment, but can we stay up, right? Because eventually this whole tariff war thing, tariff discussion, what do we want to achieve? Well, we want to achieve deals, right? We want to hear deals coming out of China, Japan, South Korea, Vietnam, Europe, Latin America, etc., etc. Change is needed for sure. How much change will happen remains to be seen. So yeah, the next couple of weeks is going to be quite interesting, because, well, guidance, I don't think the guidance that companies are going to give us is going to be valuable, because maybe a week after they give us guidance, things are going to change and suddenly things get easier. So remains to be seen. All in all, those are my thoughts. Leave your thoughts down in the comment section below. Like, subscribe, all of that, and I see you all in the next one. Bye bye.